as the world's biggest streamer is set to announce its earnings for Q1 of 2023. Investors will be looking out for one number in particular. The streamer's change to its business strategy is currently more captivating than its popular shows. Its recent strategy change has left the market in suspense because it used to be that Netflix prioritized gaining new subscribers at any cost. But moving forward, it's focusing on a more profitable and sustainable growth strategy. That means clamping down on password sharing, adding a less expensive pricing tier that allows advertising, and cutting prices by up to 50% in over 100 countries. Before we get into this, make sure to subscribe so you don't miss any business or personal finance news. The new strategy has brought investors' attention back to Netflix. Its share price has more than doubled since its low last June. The company and Wall Street analysts alike are feeling optimistic about free cash flow, any money that's left after expenses. They're expecting it to come in at more than $3 billion this year. That's double last year's amount and a big improvement from the firm's cash-burning history. One thing to bear in mind is these strategic changes will take time to show. So, whether Netflix misses or beats this quarter's earnings per share, which is estimated around $2.88, that's not where your focus should be. What's more important is that Netflix doesn't show signs of compromising on growth as it embraces profitability. Netflix isn't the high-growth firm it used to be, but at 30 times its price to earnings, it's not priced like a mature, slow-growth company either. Here's what to watch for. Subscriber growth will still be the #1 thing to look for on Tuesday when Netflix reports its earnings. The streamer hasn't given any official guidance on this number, but management has hinted that subscribers would grow during the first quarter. From that, Wall Street analysts have been guessing around 2 million new subscribers. The chart above shows the firm's previous 4 quarters of net subscriber growth in blue bars compared to Wall Street estimates in red bars and the share price reaction. As you can see, subscribers definitely matter. No one knows what will happen, and this quarter's results will likely be even noisier than usual, given the firm's strategic changes. But there are a few things that might give you a hint about that critical subscriber number. Firstly, viewing figures. Netflix lists its top 10 shows and their weekly viewership figures. However, it's estimated that viewing of chart-topping shows fell by more than 10% versus the same time last year. Viewing doesn't sync perfectly with subscribers, but it's probably a little correlated. Fewer eyeballs on Netflix's hits might be a bad sign for subscriber numbers. Next, Netflix is offering new, lower-priced plans. Recent news reports suggest that Netflix's ad-supported plan is gaining some momentum. A Netflix subscription might not break the bank, but plenty of consumers have been sharing login details to save money, so cheaper prices will be important as the stop-to-password sharing gradually becomes more forceful. So, the news there is pretty encouraging for the company. Lastly, Netflix is slowly rolling out its password sharing restrictions, which bodes well for the stock. The new rules on password sharing are expected to take a hit on subscriber numbers, but a continued steady approach could prop up this quarter's subscriber numbers too. Conclusion. Overall, there are reasons to be optimistic and reasons to be cautious. It's anyone's guess which way this will go tomorrow. But Netflix's future doesn't hinge on one quarter's subscriber figures. Instead, pay attention to what the company says about how all of its new tactics are going. Remember that Netflix is aiming for long-term profitable growth and is bound to hit some issues along the way. You'll want to keep that in mind if its stock price plunges on Wednesday, as it could be an opportunity for longer-term investors. Let me know your thoughts on Netflix's stock at the moment. Make sure to watch how the market reacts to the earnings call tomorrow. Thank you for watching. Make sure to subscribe to stay up to date on all the latest business and personal finance news.